Hello everyone, my name is Moe. Welcome back to another video of Income Investors. With me today is John Whitefoot, but before we go into any details, understand that anything you hear in these videos is for information and educational purposes only. For more information regarding risk when it comes to investing, please see the description below. Over the past 1 year, there's been a lot of noise suggesting that the housing market could face a lot of problems. This is mainly because Federal Reserve has raised interest rates, bond yields have skyrocketed, mortgage rates have gone up. A lot of noise. Housing market could face a lot of problems. We've seen new home sales come down. We've seen, sales activity in the housing market has come down, and prices have cooled off as well. But understand that not all companies are created equally. With this, I want to bring in John Whitefoot here. He's going to be talking about a company called MDC Holdings. It's traded on New York Stock Exchange under symbol MDC. It's one of those housing plays that's really worth looking because not just that it's a good company, they pay a decent amount of dividend and has a great track record. So, John, if you want to elaborate a little bit more.
Thanks, Mo. Yeah, MDC Holdings, it's one of the housing companies that people don't talk about as much as some of the bigger plays, but it's still one of the country's leading home builders. They had a banner 2022, which included record home sales, revenue, and over 900 million of cash flow. And the outlook continues to look good despite challenges in the real estate or housing industry. The company took efforts to modify its strategy to focus more on quick move-in inventory, since the majority of today's buyers want a quick move-in sale between 30 and 60 days. So they accommodated to build a suit to that. It also has a more aggressive approach to prices and incentives and requires higher deposit amounts for build-to-order homes, which should help MDC Holdings lead to even better record sales in 2023.
Explain to me a little bit about what they do. Are they just your typical, build homes and sell them kind of business, or what exactly do they do?
They basically do everything a home builder, home buyer need. They were founded in 1972, and since then they've helped over 230 buyers move into their homes across the country, where some companies specialize in massive mansions or massive communities. MDC actually specializes in single-family detached homes for first-time home buyers and those looking to move up in affordable markets. And those affordable markets include Denver, Colorado Springs, Salt Lake City, Las Vegas, Phoenix, San Francisco Bay Area, San Bernardino, Sacramento, Portland, Boise, Nashville. Yeah, basically metropolitan areas all across the country that are more affordable to buy in than, say, Beverly Hills. In addition to building homes, they do everything associated with that. That includes helping customers design the interiors of their home, which means selling higher margin merchandise like lights, cabinets, kitchens, everything like that. Their subsidiaries also provide financing, insurance, and service titles. And their cash position is huge at 1.28 million, and no senior notes are due until January 2030. So despite the tough climate, they're pretty flush.
Interesting. And I know 2022 was a very tough year for real estate. If I'm recalling the number correctly, housing market lost about 2.3 trillion in value from the peaks that we saw in early 2022. How did MDC Holdings do in 2022, and how is their financial outlook?
Yeah, again, despite perceived industry headwinds, they had, in management's words, a banner year. For the year ended December 31st, home sales revenue increased 9% to 5.6 billion. Home building pre-tax income increased 5% to 691 million. Net income actually slipped 2%, but it was pretty marginal, to 562 million. Despite the slight decrease, it still represents one of the most profitable years in the company's history. And cash flow from operations came in at 905 million, compared to cash used in operating activities of just 208 million. So the company performed exceptionally well in 22, and its balance sheet is actually strengthened, which should enable it to actually increase its land holdings for cheaper than what it would have done had it bought in 2021 and even parts of 2022.
And then now moving on to the fun stuff. When I read your analysis on MDC Holdings at IncomeInvestors.com, I actually looked up the company. And am I right here that MDC has actually raised its dividend every year since 1994? That's impressive.
Yeah, since 1994. So you're talking recessions, pandemics, financial crisis. It didn't matter to MDC. They still gave buy and hold investors a raise every year since 1994. Since 2017 alone, the payout has grown more than 100%. Wow. It currently pays a dividend of 50 cents per share, or $2 on an annual basis, which as of today represents a yield of around 5.3%, which again, topping inflation, which is now below 5%. And as a point of interest, MDC doesn't just provide like a great, reliable dividend. It's actually the best dividend in the industry. Again, I said 5.3% dividend yield. Their nearest peer is KB Home, and they're on the New York Stock Exchange, KBH. They pay a dividend of 60 cents per share for a yield of 1.1 or 1.5%.
Wow.
Yeah, so no one can really compete with MDC as far as dividends, reliable dividend growth and payout goes.
Yeah, and yeah, what's interesting is during the housing crisis that happened, 2007, 2008, 2009, even a lot of housing companies and developers, they actually just stopped paying out dividends. It's interesting to see that MDC didn't really stop, and they just kept going and keep treating their shareholders really well.
Yeah, they're not as leveraged as a lot of companies are with like massive amounts of properties out there that they need to continue to service, or building homes that no one wants. Again, they're really niche market,
right,
that they've capitalized on, and they're good at it, obviously.
Right,
and that's reflected in their share price too.
Right, and if you want to talk a little bit about how their stock has done over the past, say, year to date, past 6 months, and over the last 1 year.
Yeah, they're like, again, trouncing the S&P 500 and most of their peers. They're up 25% year to date, 34% over the last 6 months, and 14% over the last year. So you can't complain with a reliable dividend and double-digit share price growth.
Yeah, there's definitely wealth preservation here, and you get to make some income as that happens.
Yeah, thick or thin,
yeah.
MDC pays.
Yeah. Thank you so much, John. In the meantime, if you want to read more about John's analysis, you could go to IncomeInvestors.com, and don't forget to like and subscribe our channel. Thank you, and we'll see you soon.